Hello, YouTube. It's here, and we want to stay very focused because we have the equivalent of the Super Bowl for data coming out tomorrow. It was a really fun game to watch, but in the end, the Kansas City Chiefs did win. So, what am I talking about? I'm talking about the CPI print, which is going to come out at 8:30 tomorrow, and we're expecting it to come in at 2.9. That is the forecast. It's going to be dropping off by more than 0.5%. Why does this matter? Well, because it would be the first time we're seeing a reading at 2 going all the way back to 2021. What is this? This is evidence of the soft landing. And we want to make sure we stay very patient and very focused because we're going to be rewarded if we are. If we start to see negative signs, we talked about all of that on the weekend. And notably, that if we just go down here to the key dates that are going to drive the chart, we talked about how there's some earnings coming out this week, but I don't really think those are going to move the needle. I think that tomorrow is the big data print. Then we got PMI and PPI coming out a little bit later in the week, but this is really the big number to focus on. And we're all the way back into extreme greed. The market actually went higher by 1 point today, and this is very interesting. So what does that mean? Please make sure you stay patient and focused, which is what we want to focus on for today. All right, before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, that would be greatly appreciated. Okay, so as we're looking here, there's two things that really stick out to me today. We have a failed breakout and a little bit of a gravestone doji on the S&P. On the NASDAQ, we're actually closing a little bit more red. Hey, it's still a higher low, still a higher high, but that is basically the pattern we've been talking about, which is the failed breakout. This is what really sticks out to me, though. It's the VIX. The VIX is up by 8% today. It's starting to move higher into that CPI print. So I'm not sure exactly what people are doing, but they're buying insurance. That's what this means. So let's pay attention to it. VIX is only at 13. It's the lowest of the teens, and the 10-year notice hovering here at roughly 4.177. So why does this matter? Well, because when VIX went up by 8%, Bitcoin took a huge rally ahead of that news tomorrow. It cracked 50,000 for the first time in a number of years. And Ether followed suit. It's up by 5.5% today. It's booming, baby. It's a bull market. So there's a lot of really bullish things out there, and the market continues to go risk on. The one part that was missing today, it was basically tech. If we look here to our heat map, we note that most of the big blocks were largely red. We go to no group, and it means that all the big blocks here are either red or flat. However, we're actually seeing more ETFs participate in this rally, notably IWM or the Russell. It's not quite three white soldiers, but those are three strong candles. And we look here to the next one, which is going to be ARK. ARK is up by 2.23%. The last number, roughly the last week or so, has been a pretty strong move for the stock. We can also note that we see what else is green on the day today. We know we got RSP, or equal weight S&P 500, actually taking a leg higher. And finally, we have things like FXI, which is up by 1.6%. And then finally, KRE, which is regional banks, up by about 2%. So this is really notable because we talked about how the S&P is actually closing down a little bit today. But if we want to see this bull market really get legs to continue to go dramatically higher, notably here on our monthly chart, we have this template here, how we're looking for, 1 second, sorry about the delay. We're talking about the pattern here on the weekend, how we could actually go to 5,600. But if there's only 6 stocks which are dragging the market higher, it's going to be quite difficult for me to hit my target. So what does that mean? It's actually good that we see these tech stocks a little bit red or flat, and that we see things like RSP picking up steam, because this thing is not yet in an all-time high, but it's inching closer and closer to that threshold. So we note that a lot of things are getting closer. If we look over here to NYA, when we looked at on the weekend too, it's within a whisker of getting to that all-time high. So this is really good, because if the market's going to continue, we want to see breadth and we want to see depth. So what that means is that we basically want to see more green names year to date. If we now look here to our performance year to date, we go to a sector. It's still mixed. Utilities are red. Tesla's red. Over here, it's still a little bit spotty. Financials are spotty. Technology's spotty. Apple's flat on the year. Okay, interesting. Microsoft's up by 11. NVIDIA's now, I think, the third biggest company in the entire world. Sorry, in the US. Whoa, this market is spicy. So what I want you to do, in the headline of the video, we say it's time to stay focused. So what exactly does that mean? What it basically means is this. What are you going to regret more? Right now, we're hovering around 500, and we talked about this on the pre-market stream. I encourage you to watch it if you want to see more context. Are you going to regret buying and it goes lower? We could see a big move tomorrow. Or are you going to regret not buying and it goes higher, like 510? Or if we go down to 490, is that going to be you? And then on the flip side, if you already own, are you going to regret not selling and it goes lower? Or are you going to regret selling and it goes higher? So I want you to really pay attention to those because if we pair that with the quote that we want to be patient, what we want to pay attention to is two things. So please bear with me. We already know we're in extreme greed. And yes, some people commented and said Warren Buffett's other quote is be fearful when others are greedy. But again, as an investor, what time frame should we be looking at? We should be looking at the monthly chart. So what that means is that until we get a monthly lower low, yes, we can be scared. We can climb the wall of worry. And there's greed. So what do? We watch levels. That's all we've been talking about lately. So as long as we're over the previous monthly high at 492 or just about, I'm going to call it 10-point cushion, unless we fall below that, there are no warning signs, period, full stop. And before we get a monthly failed breakout and then a lower low, the lower low is only going to happen if we come all the way down here to 466. That's a long way from here. It's nearly 10% now. So again, please remember that on these weekend videos, we've been talking about on the annual chart, we're bullish over 480. On the monthly chart, we're bullish over 492. So if we're over 492, as worried as you might be because we're in fear here, or if you're feeling really greedy, just be mindful of where we currently are. Why? Again, that Super Bowl number is going to come out tomorrow. So the market's going to have fireworks. It's going to have confetti. It's going to have all that good stuff. So the first warning sign that I would point to is going to be here on the weekly chart. And what I'm looking for here, the first pattern is going to be a failed breakout, which means that we make progress to the upside, but then fail to hold it. We can see that here with this week's candle where we poke to a new high, which means we got above 501.65, but now we're back below it, hovering roughly at 500 here. So that's the first sign. The same thing we talked about on the monthly chart. And remember, that's going to be 492. I encourage you to rewind and replay if this is confusing because I cannot make it simpler. And then before we lose that monthly area, if we look here to our weekly low, it's at 490.23. So why is that really important? Well, because if we print a weekly lower low, we're going to lose 490. And then we're going to be below the first warning sign or a monthly failed breakout. So that's it. That's the video for today. We just want to pay attention to basically 490 and 492. If that is really simple, I'm really happy to hear that because I want you to pay attention to the fact that we're still pointing up. And until we actually see the weekly candle close out, I would not call this one way or the other. So tomorrow, we're going to get through the biggest data point of the week, which is going to be CPI. But then as we get to the later part of the week, there is going to be more data, notably PPI or Producer Price Index coming out on Friday. Why is that number important? Well, let's go here to the data. So if we look at this week, we jump forward to PPI. Again, producers produce, consumers consume. So if this comes in at 0.1, that should be a good clue for future CPI reports. All right. Thank you so much for tuning in. The weekend video with more context is now over here on the left-hand side. If not, maybe you want to subscribe and hang out with me at 9 a.m. Eastern tomorrow. Thank you so much for watching. I'll see you on